Hey, what's up, traders? This is Trader Tim from eMoneyMind.com bringing you another Monday market analysis as well as a monthly analysis. As you guys all know, trading futures, option on futures, and retail off-exchange foreign currency involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Taking a look at the ES, we're coming up into some very important and actionable pricing areas. So after breaking down in the late August sell-off, we've been holding at this 1984 short, and that's just drawing from highs to lows and taking a 50% retracement back, halfway back of the move. We've traded down once, twice, three times, and so I'm looking here as we approach 1984s again this afternoon, more so as a play for tomorrow morning, Tuesday, to be looking to get short here at 1984s. Now, a couple scenarios that could give us an entry into the short. The first would be that we open up and we immediately start to sell off. So if we open at 1984s and start to sell off after about 15-20 minutes of trade, then I would look to get in on a little bit of a pullback, a little bit of a bounce, and look to short to take the market lower. The other scenario that can sometimes happen here is that we gap up. You know, if we come back here to this large body candle, we were basically within, an inside day, if you will, of this large body candle, all the way down onto the sell-off. We had the little spinning top that we talked about, and then the next couple of days being higher. Well, today is the first day that we broke the August 24th high. So the bulls may be getting excited. We do have these swing highs just behind us here, roughly we'll call it 1992s, and that area, as we start to break prior swing highs, is really important. We've got the main line in the sand up here at, we'll call it 2020s, 2010s being the swing high, 2020s being the 61.8. But as we start to break through these levels, in this case, because we're breaking to the upside, the bulls start to get momentum and feel good about their positions. And so if we do get a gap up in the morning, because it would be occurring after this rally, it would be likely that a gap up would be fadeable. So let's say we gap up to 1990s. I would look for that gap to start selling off. So the key factor would be, say, the first 15-minute candle. Look for that low to break if we get a gap up scenario, and that could be a trigger into a push lower, and you could simply place a stop above that, whatever the high of the morning is, if it's a gap up. So with gaps, you want to look at where the context is. So if we are trending down and all of a sudden we gap up and start to initiate a new move, a lot of times those will sustain themselves. But when we're moving higher and all of a sudden we gap up, those are not quite as sustainable, just because the gap has occurred after the trend has been moving in that direction for so long. So we're not quite closed. The market's not quite closed yet here on Monday, but we are approaching this 1984. So that's why I'll be looking to for a short to take us lower. Now, if we gap up above all the way up above here at 2010s, it's certainly likely that we could break the 61.8 and continue higher, and then I would be looking for some sort of pullback to get long if we break the short. But because we've tested three times already, I would expect some sort of contesting here, some sort of effort by the bears to step back in. The bears were able to push us this far lower, or the lack of bulls, if you will, allowed the market to come down this far with such strong volume. So it would be unlikely that the bears would just essentially throw in the towel and we move back into highs, especially because we have all this consolidation back here at the 2040 level, and then the recent sideways action up at 2100s that we sat in for most of the summer. So that's kind of what I'm looking at on a bigger picture. In the webinar I did a couple weeks ago, we were talking about tick charts, and so I wanted to pull up my tick chart and talk about a little bit of today's kind of a setup that I see sometimes here in the morning on the tick chart, and something to kind of look for when you're looking at the tick chart. So I'm not going to go into a whole lot of detail about the chart itself, just because I have in the past. I've got tons of I've got a full guide to trading tick charts over at eMiniMind.com, and then the webinar I did a couple weeks ago with Infinity, I talked about laying out the chart. But looking at the tick chart, this morning, right about 9 o'clock Central Time, we had made a new high in the day. Then we pulled back, and so I was looking for either this setup to go from its 50 to its target, being the negative 23, or to break the 61.8. Well, we traded right just before 9, and I allowed the trade to kind of work itself out. We didn't get up to the negative 23% target. Instead, we sold off, and we broke the 61.8. So even though we were uptrending, the first thing I did was pulled from highs to lows and was looking for a potential for a short, because the short-term momentum to the upside had broken down. And indeed, we did get a short at the 50%, 64s. And while the short is a very high probability trade, we've got a 64 short that lines up with the prior swing low. We get an initial reaction, some initial follow through. Because we're trending up in the morning, rather than leave my stop up here at -6, what I like to do when we get these quick breaks, but I'm going against the trend, a lot of times if we do get a break like this where we're trending higher and then we break the long and we start trending down, if it's going to go, it's going to go right away. And it's going to move down and not retrace its steps. So what I like to do is take my stop from -6. As soon as we get trading lower and trade to the opposing, as soon as we come down and touch the 50% in the opposite direction, just move my stop one tick above the high of my entry candle, because that way I'm using the data that the market's giving me as my failure point and not just leaving my arbitrary stop of 6 ticks just sitting out there. So this way, if the market does go lower, well, my stop is not in jeopardy, because a lot of times these instances where you take the first setup in the new trend, if it's going to go, it's going to go, and it's not going to retrace. So in this case, it failed, and so by tightening my stop, you're able to limit your losses. And then once we do break the 61.8, you can either flip your position or wait for the next pullback to take the market higher. And indeed, the rest of the afternoon, we have been moving higher. So that's kind of a way to utilize the tick chart in the context of, okay, we're potentially there could be a trend change. And just where we're at right now, looking at the chart, we have, once we get a break of the swing low, we're trending up, we break the swing low, we look to take the first setup in the new direction, and we look for a move up into the 50 and to trade down into the negative 23% target. Perfect example of a trade following through. If we were to draw the opposing in this case, and as soon as the market came down and touched the opposing, move our stop to a one tick above our entry candle, the trade just kept going in our favor. We never came up and retested. So that's an example of a trade that followed through, and same tactic or the same stop management where we're tightening our stop to our entry candle once we get to the opposing, just in case the momentum does shift again. And so that's kind of how I look to manage or adjust my stop within trades, using the market data to give me stop placements, whether it's under a swing low or a swing high, or moving it below or above each candle as we start to move in the direction of the trend. So I just wanted to kind of touch on some of the little nuances of my intraday trading. And like I said, I've got a full tick chart guide over at eMoneyMind.com, as well as some more videos, the webinar I did with Infinity, and a couple of blog posts as well. So if you have questions, feel free to shoot me an email, tim@eMoneyMind.com, and we'll talk to you guys soon.